These guys are networks. They're not like brokers get on the phone like buy, sell. They go and have a steak dinner with their best client who talks about this Bitcoin ETF. They're like, I'm not sure. They read Barron's that week. They're like, I'm not sure if it's the right thing to do. They then go and play golf. Their other client talks about it. And eventually, this huge property developer from Cincinnati then sticks in, $5 million into the ETF. This is the process. So it's actually really slow. And we've only just started. And a lot of these people are driven by price. Look at NVIDIA, you see how price feeds on itself. It becomes reflexive. So we've just started.
Wait a minute, everyone. Welcome to Bitcoin Zella, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoin Zella offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoin Zella. Subscribe now. In today's video, Raoul Pal shares with us his prediction for Bitcoin in 2024 and how Bitcoin ETF will drive the price to break $100,000 this year. Raoul also thinks that this bull run cycle is the first of its kind because big money comes in. So without wasting any time, let's dive into the video.
These RIA networks generally talk to their clients about, you should think about an X% allocation. They put an X% allocation or they mandate it and say, hey, we're going to do this for you guys. They do it. And then what happens is, Dan and I have seen this all the way through with friends of ours. They start with 1%. And then before you know it, they get up to 5%. They're like, we're going to 10% because they start to understand the power of this thing. So it becomes very reflexive in price action. I've seen family offices. I've got one of the investors in my fund is a big Australian family office. At first, their allocation was 1%. I think they probably got up to 20% in crypto allocations in the end, because, once the principal started to understand it, that it just keeps building on itself and the price action just builds on it. So we've, as Dan said, we're really, really early still. And then there's also these massive platform models like BlackRock, Fidelity, Morgan Stanley, JP Morgan, that suddenly add it to their asset allocation mix. And those guys control like $1 trillion of assets. So once they do it, it's the same process. It then starts dollar cost averaging in. And, we've seen BlackRock talking about doing that. I don't think it's even started yet. So those massive pools of capital start coming in as well. And we're not talking institutions. None of the institutions are in yet, really. Also, don't forget, the 401k bid in America is another big thing. One of the reasons passive funds have outperformed active portfolios, like the NASDAQ and the S&P, keeps outperforming, is because millennials, every 2 weeks, add to their 401k of this stuff. They can now add Bitcoin into their 401ks. So that becomes a every 2 week bid that goes in perpetuity forever. Now, it doesn't mean it can't go up and down, with the business cycle, but it's a very big structural change that people don't really understand.
Bitcoin whales are not in a rush to sell into the current rally that propelled Bitcoin to new heights above $70,000. The latest on-chain data suggests the number of unique addresses holding at least 1,000 Bitcoin, known as whales, has risen to 2,104 addresses as of March 7. However, this is still lower than the record of 2,489 addresses reached in February 2021, when Bitcoin was trading above $46,000. The rising wallet count could also be attributed to the United States Spot Bitcoin Exchange Traded Funds, ETF, which surpassed $52.5 billion in cumulative trading volume on March 4. The fact that whales are not selling their Bitcoin at these levels suggests that they expect prices to rise further. Bitcoin whales are important because the size of their trades can significantly impact price. Julio Moreno, the head of research at on-chain intelligence firm CryptoQuant, also took note of the growth in a March 7x post. Moreno wrote, "The growth of whales' Bitcoin holdings is going parabolic."
You've got to understand that a 5% interest rate is not a hurdle to an asset that goes up 100% a year on average, right? It's irrelevant. But liquidity drives assets. So liquidity did pick up, but as Dan's rightly said, the game is only just started in the liquidity cycle. At the end of this, I mean, the Chinese are in the middle of pretty much a debt deflation. They're going to print money, serious amounts of it. The Fed are going to cut, the Europeans are going to cut, the Fed are probably going to end up bailing out a few banks. The whole game is to be played. We've got an election to bribe voters with. There's usually, straight after the election, there's usually a fiscal stimulus. Let's say Trump gets in, he'll probably do a stimulus. There is money to be handed out all over the place. So what is surprising is, yeah, we had a very strong run even before the halving. It's early in the macro season, but it is what it is. Does it mean that we're going to have a really big run this cycle? I don't know yet. Cycle to me is driven by the macro. That macro cycle has been the 3.5-year, 4-year cycle, and it's the same cycle in all assets. So I don't see any reason the cycle would change unless we create some sort of weird monster bubble in crypto, or we just got a very strong cycle on our hands. Some cycles are stronger than others. And the last cycle, I thought cut short. I thought there should have been a next leg higher. I thought it should have got to 100, and it didn't. And I think people have PTSD from that. And so I think they're fearful of screwing it up again and getting too bullish. And I actually think there's actually more of a fear of something like 2013 where it kind of had a dip. Everyone thinks it's over, and then it went up like another 4x, something stupid. I think the bubble cycle's actually maybe a higher probability now than this left translation. When I talk to people about the left translated, when you ask them, it's just PTSD. From the everything code work that I've done, that I've talked extensively about, it should be, normally, it's right towards the very end of 2025. Now, could it be a little bit earlier, but normally the crypto cycle ends in November, December, every time. If you just step away and say, it's a slightly more aggressive start than we've had, why? Because we got an aggressively more amount of capital has access to the space. So it kind of makes sense. At a very top level, more people have access to it, goes up more. Fine. Step back. I mean, I even started in this crypto journey back in 2012, 13, because of this whole process. It happened in Europe, and it's been a rolling process. An excess leverage society will end up destroying all of its banks. So this has been an ongoing thing. So it's not going to stop until they all disappear and you end up with some sort of nationalized banking system. Half the European banks are still insolvent, technically. They're just being propped up by the ECB because you can't lose Deutsche Bank because it's the largest bank in Germany.
The next Bitcoin halving will occur in April. Based on historical trends, Bitcoin often undergoes notable price fluctuations before and after a halving event. However, despite the potential for volatility, there are investment opportunities, and conducting a technical analysis can help traders with their investment decisions around the Bitcoin halving event. The following sections delve into the strategies to capitalize on the Bitcoin halving event. Timing the market. The strategy relies on the principle of buying the rumor, selling the news. Investors follow the market news and sentiment to understand market dynamics, conducting market analysis, and making a move when they spot trading signals. However, this is one of the most challenging ways to capitalize on the Bitcoin halving because an investor's timing has to be spot on, which is rare. Short-term trading. Traders adopting this strategy usually capitalize on regular price movements to achieve short-term gains. It requires detailed technical analysis and the adoption of sound trading strategies to pull off. They also monitor price movements, identify trends, and set entry and exit points. Long-term strategy. This is also known as a buy and hold HODL strategy. While there is no guarantee the price will increase after the 2024 halving event, past events show Bitcoin's price increases a few months or years later, hitting all-time highs each time. Dollar cost averaging. Employing the dollar cost averaging DCA strategy means investing a set amount of money at fixed, regular intervals, regardless of Bitcoin's current price at those intervals. The strategy aims to reduce the impact of market volatility by spreading the investment over time. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.